Hey, it's Zane. Welcome back. Thanks for tuning in. I appreciate you being here once again. And in today's video, I want to have an interesting conversation with you. I want to talk about how you can 10x your purchasing power over the next 5 years. And I also want to explain why this is so important in this environment that we're in this inflationary world that we live in right now. And of course, Bitcoin is front and center as a solution. And I want to explain to you some really key points here today. I want to share with you 4 key points as to how Bitcoin can play a really significant role in your planning for the future, particularly if you're thinking about retirement in the next 10, 15 years. This is something that you'll really want to pay close attention to. Now, the first thing to realize is that we are in an inflationary world. And it's not going to stop. It's actually going to get worse and worse moving forward. And the reason for that is because they need to create more currency, which essentially is what creates inflation, in order to maintain solvency in the system. And so all of the real estate and the stocks and the shares and all of the assets that are out there that are backed by debt, they need to keep ensuring that the valuations of those assets far exceeds the debt in order to support the entire system, in order to keep it afloat. And the only way they can do that is through currency debasement, which is essentially money printing. And so we're at a stage now where if you're paying attention, you need to really be asking yourself where it is that you want to park your long-term savings, your long-term capital, your retirement accounts. You need to be thinking very seriously about underperforming assets or assets that the rules are being changed on, such as real estate. We're seeing that in this country right now, the rates and the land taxes and all of these kinds of things that we didn't anticipate are now becoming really serious for a lot of people, where they may have to actually be forced to actually divest, to sell their properties. And so all of these things are part of the problem when you're really paying attention to the central control system. And this is what drives inflation. Currency debasement is the main thing. And we have to understand that in this country alone, in the last 5 years, the rate of money expansion, so extra currency units circulating, has increased by 57% in 5 years. And what this actually means is that if you had, for example, $100,000 sitting in the bank in, say, the beginning of 2020, that $100,000 would have bought you $100,000 worth of stuff. But since inflation has gone into overdrive, since the money supply has increased by 57%, today that same $100,000 may look and feel the same in your bank account, but the reality is you can only buy $43,000 worth of stuff, worth of purchasing power with that $100,000. And so you've done nothing wrong. You've just done what you've always thought is right and been told to do, which is to save for a rainy day. But through no fault of your own, your financial future has been stolen from you. And this is what is happening right now. And it's happening in accelerated form. And again, if you're paying attention, you'll see the attacks. You'll see this happening. And so now we have to make some really prudent decisions about where it is we want to be in 5, 10 years from now. We need to start taking action. We need to start looking very seriously at decentralized assets as a way to protect and preserve our purchasing power and our financial energy. And of course, in this conversation, Bitcoin is front and center. So with that kind of backdrop, I want to jump into these 4 key points for you and how this relates to you really buying your purchasing power over the next 5 years, but then beyond that, 10 years, 15 years from now. Now, the first thing you have to understand CAGR, compound annual growth rate. Compound annual growth rate. You have to get very tuned into assets and how they're performing historically in order to plot a plan for yourself for the future. Now, we know in this country that real estate, for example, over the past 50 odd years, it's done somewhere between 8 and 10%. But what's really interesting about real estate is when you actually compare it to the expansion of the money supply since 1971, when the gold standard was broken and currencies essentially became backed by nothing, including the Australian dollar, the house price growth is actually tracked absolutely perfectly with the rate of inflation, with monetary expansion. And so in reality, even though everybody thinks their home has gone up by 50, 60, 70, 80, 100x in that time frame, when you actually compare it to true inflation, they haven't really gone up at all. And this is really important to keep in the back of your mind. And, you know, I might in this video just explain to you an example of a piece of real estate just from the last few years ago down the road here that I priced yesterday in Bitcoin and what that actually means. But let me move on. So CAGR, you have to understand compound annual growth rate. Now, over the last 10 years, ARK Invest, headed up by Kathy Wood, they put out a chart about 6 months ago, which was really interesting. You can actually find it online. But the thing is that over the last 10 years, every other asset except Bitcoin, on average, so real estate, stocks, shares, bonds, currencies, gold, silver, fine art, collectibles, etc., places where people store their savings, on average, over the last 10 years, all of those things have done 8%. 8%, which is in line with house prices in this country, superannuation funds. We know that ASFA, the Australian Superannuation Fund Association, puts out figures every financial year. The latest figures for the end of 2024 suggest that 8%, 8.2 it may be, is the average rate of return for superannuation funds for the past 10 years. So it's widely recognised that, you know, 8 to 10% is what most assets tend to do. But in an inflation environment, that's just simply not enough. Is when you look at Bitcoin in comparison over the past years, Bitcoin's CAGR, compound annual growth rate, has been 59%. And I always say in my videos, you know, 55 to 60 around there, but ARK Invest put out a chart which specifically alludes to 59% being the actual compound growth 10 years. So let's just go with that. So what that enables you to now do is to get your hands on the reverse CAGR calculator, and I've got a link to it in my show notes because people were asking for it all the time. Zane, can you tell us where to get this bloody CAGR calculator thing? So now I've put it in the show notes just so you know. And click on it and you'll see 3 simple fields: starting amount of capital, the number of, the compound annual growth rate that you're working with, so in this case 59%, and the number of years, and in this case 5 years. So if you put $10,000, 59% CAGR, 5 years, then what you'll see is if you did that today, in 2030, that $10,000 would become $100,000. If you put $100,000 in at 59% CAGR in 5 years, it'll be $1 million. Put $1 million in 5 years, it'll be 10 million. You get the idea. So 59% CAGR over the next 5 years is 10xing your money, 10xing your savings, 10xing your capital, however you want to term it. We don't know that Bitcoin's going to perform at 59. It could be more than that. It could be a little less than that. And this is why I'd encourage you to use the CAGR calculator to plot some figures for yourself. I was doing a one-on-one Zoom call consultation with a couple last night from New Zealand, and we did this in real time. And it's really interesting, you know, just to put some figures in there so that you can start to see for yourself, based on where you would like to be in, you know, 5, 10, 15 years from now, what it is that you need to do now. And it really helps to make some decisions in terms of capital rotation. So understand CAGR, that's point number 1. Point number 2 is I really want you to have a low time preference. Low time preference. And what that means is zoom out. You want to be thinking long term, not short term. And this kind of goes against everything that is around us in society right now. You know, society has kind of channeled us in a direction where We want a high time preference. We want everything now, 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 now. We want instant gratification. And this is why, credit card debt is the highest that it's ever been. People want things now. They don't want to put them on lay-by. They don't want to save for it and then get it. They want it now, 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 now. So this is the society we've bred now. And also subscriptions. Everything's on subscription now. So we don't really own anything. It's kind of channeling us to kind of own nothing and be happy, just rent everything in the future, which is kind of fascinating to think about as well. So you need to have a long-term time horizon. When you're thinking about Bitcoin as an asset, as a monetary protocol, as a place to park your long-term financial energy, you've got to zoom out. You can look at a Bitcoin chart since 2009 and the trajectory is absolutely crystal clear, up and to the right forever. And the reason why it is going to continue to do that is because Bitcoin is fixed, finite, absolutely scarce, and cannot be debased. The rules cannot be changed. There can be no more Bitcoin. Once all the Bitcoin is mined, the only way you'll be able to get Bitcoin is by exchanging value with people who want to pay you in Satoshis. And what's really fascinating about that is that this economy is already happening. In fact, there's a big fast food chain in America. The CEO just announced a couple of weeks ago, it's called Steak and Shake. They are now accepting Bitcoin payments on the layer 2 solution, which is instant payments via a protocol known as Lightning. So the thing is that this is all ahead of us. Okay, so we have to understand where we are on the adoption curve. This is like Internet 1999. Okay, we weren't shopping online back then. We didn't think it would last. Bitcoin is a protocol upon which all these other technologies are going to be built. So you want to own base layer protocol. Bitcoin, you're able to own a part of the base layer protocol. Imagine if we were able to own a piece of the internet, the actual base layer internet. And then on top of that, what was built? Google, Facebook, Amazon, all of these technologies, Zoom, Netflix. So as a base layer owner of that protocol, we get to benefit from and participate out of all of these value systems that are built on top of this base layer. And so this is the other way I want you to think about Bitcoin, as granite, as the base layer protocol that you're actually storing your value in. So long time preference, trust the mathematics. It's engineered mathematically to go up and to the right forever because it is fixed, because it is finite, and because as demand and adoption and the biggest pools of capital on earth, institutions, nation states, governments, every company on earth starts wanting to take Bitcoin, put Bitcoin on their balance sheet, what is going to happen? The value proposition of Bitcoin is going to get more and more and more as time goes on because it is finite. Number 3, use DCAing to your advantage. DCAing refers to dollar cost averaging. And again, this speaks to zooming out. A lot of people get spooked. When the price is too high in Bitcoin, everyone goes, oh, I've missed the boat. When the price starts to drop in Bitcoin, they go, oh, Bitcoin's going to zero. And this is why people who haven't done the work on Bitcoin, they'll never own Bitcoin, because they're just fearful when it's going up, they're fearful when it's going down, and so they never take any action. When you dollar cost average, you don't care what the price is, because you know over the fullness of time, whether you're buying at the peak or whether you're buying at a dip or in the trough, it really doesn't matter, because your cost base smooths out over time. And I know that if I was to add up the dollar cost average, bags that I've purchased over the years, I mean, the thing is, I don't care that the price now is 110,000 US dollars. I'm still a buyer, because over the course of time, my dollar cost average entry point just gets smoothed out, and I understand what I'm buying. So dollar cost averaging, really important. It's a function of having a long time horizon, a low time preference. So don't be scared by these short-term price movements, and just dollar cost average your way in. Either be it small, saving a little bit every week or fortnight into Bitcoin, or lump summing in. Dollar cost averaging will be your best friend with that. Point number 4, and the last point in today's video that I want to share with you is, if you want to benefit from everything that Bitcoin has to offer, and you want to be here in 5 years, and you want to 10x your purchasing power, and then you want to set yourself up for retirement and never have to work again in 10 years, 15 years from now. If you want to benefit from all that, do not sell your Bitcoin. Do not trade your Bitcoin. Do not think that you can beat or outsmart the market. And what I mean by that is, I meet people all the time who say, what if I just sell Bitcoin at the top and then when it crashes, I'll be able to buy more Bitcoin? All I can say is good luck with that. Not only is it stressful, anxiety inducing, virtually impossible to do, because even the best traders on earth haven't been able to do it successfully. In this environment, my advice would be, don't do it, because all that you're going to do is let go of your Bitcoin to people with way deeper pockets than you have, and you'll never get your Bitcoin back. That's what I think. I just think that trying to time or play this market with Bitcoin, knowing that 19.8 million of the 21 million have already been mined, this is not a limitless commodity. Bitcoin is fixed and finite. Once it's in the marketplace, like I said, the only way you'll be able to get access to Bitcoin is by having somebody part with their Bitcoin so that you can get it. And so the time is now, my friends. The time is now. Do not trade your Bitcoin. Do not think you can outsmart the market. People way, way, way smarter than you and I haven't been able to do it successfully. And I'm of the firm view that if you part ways with your Bitcoin, these big institutions, they're going to eat you for breakfast and you'll never get it back. So that's my advice that I hope you get loud and clear on that point. Because if you are going to 10x your money, then you've got to still be holding your Bitcoin in 5 years. That's really the point. And that requires the right mindset and understanding. So be disciplined, don't get distracted, zoom out, and make sure you get your Bitcoin into self-custody. I'm still meeting people every single week who still have their Bitcoin on exchanges, still have their Bitcoin in setups that could very easily be compromised. This is something that I'm absolutely hell-bent on getting through to people, that you have to be in self-custody. Yes, there is levels to it. You can become fully self-sovereign. You can run your own node. There's a whole bunch of things that you can do, but just breaking it down into bite-sized pieces, step number 1 is to ensure that you get your Bitcoin off exchanges into self-custody so that you own the keys and that you're in control. Again, I'm happy to talk with you about that at a deeper level if you book a one-on-one call with me, and we can go through it. And I know you'll get tremendous value from that. Other than that, I hope you got some value from today's video. Please like, share, and subscribe. Subscribe if you haven't already to my channel. I'd love to have you a part of the community. And please leave your comments, what you got out of today's video, what your thoughts are, and any feedback, insight you want to share. I always appreciate that as well. Have a great day. Thank you for tuning in. This is Zane signing out. I'll see you in the next one. Bye for now.